Okay, welcome to a deep dive. Today, we're plunging into something that's definitely on a lot of minds right now. The current state of Ethereum.
hmm
We've got a recent price analysis piece that you shared, and, well, our mission today is to sift through it, pull out the really important insights for you.
That's the plan. Think of it as cutting through the noise to understand what's really driving ETH's price action at this specific moment.
Right.
And this analysis, it covers quite a bit. Chart patterns, market mood, even, how global events are playing a part. We're going to unpack this complex picture together.
Okay, so let's start unpacking. Where does the analysis begin? Looks like it starts pretty broad with the macro environment.
Yeah, exactly. It looks outward first. And it points pretty directly to, well, the increasing geopolitical tensions we're all seeing,
Yeah.
specifically mentioning conflicts like those between Iran and Israel.
And why is that the starting point? How does that connect to ETH?
Well, it's critical because, as the analysis highlights, these big global events, they really impact global risk appetite. When there's fear and uncertainty like this, investors tend to get cautious.
They pull back from riskier assets.
Precisely. And that doesn't just hit traditional markets. That caution, it spills right over into the crypto space, including Ethereum.
So the immediate effect, according to this analysis, is likely more choppiness, more short-term volatility.
That's usually what you see. And while ETH has shown maybe some relative stability lately, holding above $2,500 for a bit.
Yeah, it felt a little calmer for a moment.
Right, but this growing fear in the wider market, it's not just background noise. The analysis points out it's actually starting to show up in ETH's price structure now and in shifts in sentiment. It's that external pressure really starting to influence the market dynamics.
Okay, so the macro picture is definitely adding a layer of uncertainty. Let's drill down then, move from the big picture to the charts themselves. The analysis dives into the technicals, starting with the daily chart view.
Yes, the daily chart. And the big thing highlighted there is the pretty significant rejection ETH saw right around that $2,800 resistance area.
A firm rejection, not just a small dip.
Yeah, it was quite decisive. And $2,800, it's not just a random number, is it? The analysis calls it a significant technical spot.
Right. What makes it significant?
Well, it lines up with key indicators. The 200-day moving average, that long-term trend line, lots of traders watch it, sits right around there.
Okay.
Plus, the analysis identifies it as a bearish order block. Basically, think of that as a zone where a lot of selling likely happened before, maybe leaving unfilled sell orders. So hitting it again often brings out sellers.
Interesting. So ETH hit this strong resistance after that rally we saw earlier in the quarter, the move up from around $1,500.
Exactly. It mentions that relief rally. And during that climb, ETH was trading inside an ascending channel on the daily chart. So picture it moving upwards between two parallel rising lines.
Okay, yeah.
But now the analysis is suggesting the price is actually likely to break below the lower line of that channel.
And a break below an ascending channel like that. What does that typically signal?
Generally, it suggests that the bullish momentum, the buying pressure that kept pushing the price up inside that channel, is running out of steam.
Kind of like exhaustion setting in.
Precisely. And the analysis notes it's especially concerning because the price failed to push much higher, even when maybe things looked okay. Buyers just aren't strong enough right now to keep that upward trend going.
Are there other signals on the daily chart that back this up, this potential shift?
Yes. It points to the RSI, the relative strength index, that momentum indicator. The RSI on the daily has dropped back below the 50 mark, and typically when RSI is under 50, it suggests momentum is leaning bearish. The average price changes are trending downwards.
So we've got the rejection at $2,800, the potential channel break, the RSI below 50. Where does the analysis see the price heading next, based on this daily view?
It looks like it's re-entering what the analysis calls the mid-range zone. So think of the area between that $2,800 resistance up top and a lower level around $2,150.
And if ETH can't get back above $2,800 soon?
Well, according to this analysis, that failure really increases the odds of a move back down towards that $2,150 support level.
Is $2,150 another one of these technically important levels, like $2,800 was?
Oh, absolutely. The analysis flags $2,150 as critical. It lines up with another key moving average, the 100-day, and maybe more importantly, it's the top of the last major accumulation range.
The area where lots of buying happened before the last big move up.
Exactly. So bouncing there would be really important for the bigger picture, for keeping that longer-term bullish bias intact.
So holding $2,150 is vital from this daily perspective.
According to this analysis, yes. A solid bounce there shows demand is still present. Losing it, however, That would be a pretty strong negative signal on the daily chart.
Okay, got it. Daily chart showing potential weakness, key levels, $2,800 resistance, $2,850 support. Let's zoom in now. The analysis also looks at the 4-hour chart, right? The shorter time frame.
It does, and interestingly, the 4-hour chart shows a very similar story, kind of reinforcing that daily view.
Yes.
Well, ETH has also broken down from an ascending channel on the shorter time frame too, a pattern it had been respecting for, several weeks.
So both time frames showing that channel breaking down. What else stands out on the 4-hour chart after that $2,800 rejection?
That sharp drop from $2,800. On the 4-hour, it left behind what technical analysts call an imbalance, or sometimes an FVG, a fair value gap.
Okay, what's that?
It's basically a price range where price moves so fast, up or down, that it didn't trade much within that zone. It leaves a kind of gap. And this area, near $2,600, according to the analysis, is now acting as short-term resistance. Price often revisits these gaps, but right now, getting back above $2,600 seems tough.
And the overall price action, the structure on the 4-hour, what's the analysis saying there?
It suggests it's starting to look a bit like a potential distribution phase.
Distribution, meaning selling.
Yeah, it's a pattern where you might see larger players selling into smaller rallies, kind of gradually offloading their positions. You often see a lack of strong follow-through on upward moves, especially after a channel breakdown like this. It hints that supply might be starting to overwhelm demand in the short term.
What about the indicators on the 4-hour, like the RSI? Similar story to the daily.
Pretty similar, yes. The 4H RSI is also weak, just below 50. And crucially, the analysis points out there's no bullish divergence.
Remind us what bullish divergence is again.
That's when the price makes a new low, but an indicator like RSI makes a higher low. It can sometimes signal that selling pressure is easing up, even though the price is still falling.
But we're not seeing that here.
No, the analysis specifically notes its absence, which suggests the current weakness might still have further to go.
And volume. What about trading volume during these recent little bounces on the 4-hour chart?
That's another point of concern highlighted in the analysis, those recent bounces. They've happened on low volume.
Which means
It suggests a lack of conviction from buyers. Demand seems to be drying up. And the analysis explicitly links this back to that macro uncertainty we talked about earlier. Global fear makes buyers hesitant. They're not stepping in forcefully.
Okay, so if this 4-hour channel breakdown continues and volume stays low, where does the analysis see price potentially heading? What are the downside targets?
The first potential target mentioned is a retrace towards the $2,300 demand zone.
And is holding $2,300 important on this time frame?
The analysis views it as pretty crucial, yeah. Losing $2,300 could, according to this source, invite a deeper correction.
Deeper towards where?
The analysis suggests that stronger buying interest, stronger support, likely weights closer to the $2,100 level on this 4-hour view. And notice that $2,150 zone keeps coming up on both time frames.
Right, the daily and 4-hour seem to be pointing to that same general area as key support.
Exactly, they're reinforcing each other there.
Okay, so we've got the macro fear backdrop, technicals on daily and 4-hour suggesting weakening momentum, and key support around $2,100, $2,150. Let's shift gears now. The analysis also looks at market sentiment, doesn't it? Specifically through derivatives.
It does, yes. And this is where things get particularly interesting, maybe even a bit concerning, according to the analysis. It looks at open interest, or OI, on Ethereum derivatives.
Open interest, that's the total value of all outstanding contracts, right?
Right.
Longs and shorts combined.
Exactly. It represents the total amount of money currently involved in leverage bets on ETH's price direction. And the analysis shares a pretty striking fact. OI recently, briefly, hit its highest point in years. It exceeded $21 billion.
Wow. $21 billion. That's a massive amount of leverage in the system.
It's huge. And the analysis notes this peak happened just before a small dip, which was apparently linked to the liquidity shifts related to those Middle East tensions.
So what makes this record high OI so noteworthy or concerning, as the analysis suggests?
Here's the crucial part, the divergence. This record high OI occurred while ETH's price was significantly lower than the last time OI got this high.
Ah, okay. So the last time there was this much leveraged money in the market, the actual price of ETH was considerably higher than it is now.
Correct.
What does that kind of divergence typically tell us?
The analysis interprets this as a massive buildup of leverage positions again, both longs betting on price going up and shorts betting on it going down that haven't been fleshed out yet. There hasn't been a big price move to force widespread liquidations.
So it's like a coiled spring of leverage.
That's a good way to put it. A huge pool of leveraged capital just sitting there waiting for a trigger.
And historically, what happens when you have this kind of situation, very high OI, maybe combined with price weakness?
Well, the analysis points out that historically, this OI price divergence has often come before large-scale liquidation events. Those sudden, sharp price moves that force leveraged traders to close their positions quickly.
The cascade effect.
Exactly. One liquidation triggers others, which forces the price further, triggering more. It can lead to very rapid, dramatic price swings.
And I can see how this loops right back to the geopolitical risk we started with.
Precisely. The analysis makes that connection very clear. Those external events, that macro fear, it could easily be the catalyst. If global investors suddenly shift hard into risk-off mode.
It could trigger the unwinding of all those leveraged positions.
Yes, potentially causing a very fast price correction as stops get hit and liquidations cascade through the derivative markets.
So the message here is, even if the price looks somewhat calm on the surface right now,
the underlying market sentiment, especially seen through derivatives, is flashing a warning sign. The analysis uses language suggesting the undercurrent is anything but stable. There's significant potential energy built up.
Okay, let's try to pull all these different threads together now. We've got the macro fear layer, the technical signals from both the daily and the 4-hour charts, hinting at weakening momentum and specific vulnerable levels below us. And now this warning from derivatives about this huge, potentially unstable pile of leveraged positions.
Right. And the core message, the main takeaway from this analysis, really seems to be that Ethereum is at a truly critical juncture right now.
It's not just one thing pointing in one direction.
No, it's the convergence. Multiple significant factors are coming together, making the price, according to this analysis, highly sensitive.
Sensitive to what? Technical moves, external news.
Both. Sensitive to reactions at those key technical levels we identified, like bounces or breaks, but also really vulnerable to sudden shifts driven by external events, like those geopolitical tensions potentially triggering that derivatives unwinding.
So this analysis really helps map out the key levels you need to be watching.
Definitely. It highlights that $2,800 resistance as a key point where rejection occurred. Then there's the critical $2,650 daily support, the 100-day MA, top of the old range.
And on the shorter time frame, that $2,600 zone acting as immediate resistance now, and those potential demand zones lower down, around $2,300, and then maybe stronger support near $2,100 if price were to reach that far.
Exactly. So the value of this kind of deep dive, looking at this analysis, is that it gives you a structured way to understand these complex forces, everything from global politics affecting psychology, to chart patterns, to hidden trader positioning. It gives you a clearer picture of the potential paths forward for ETH based on this expert view.
Moving beyond just the price chart itself and understanding the dynamics underneath.
That's the idea.
Okay, so there you have it. We've unpacked how these different elements, the macro situation, the technical chart showing potential exhaustion, and the derivatives market flashing warnings are all pointing towards a very sensitive moment for Ethereum.
Yeah, the analysis definitely paints a picture of caution. It suggests that even with the recent stability, the market could be poised for, increased volatility ahead, especially if those key support levels we talked about, like $2,150 or $2,100, don't hold, or if those macro fears ramp up again.
And here's something to really think about, building on that derivatives point. We heard the analysis highlight that record open interest building up, while ETH's price is actually lower than the last time OI was this high. What might that tell you implicitly about the nature or maybe the conviction behind all those leveraged bets in the market this time around compared to previous cycles? And how could that difference potentially impact the speed or maybe the severity of any future liquidation event if one occurs?
That's a fascinating question, isn't it? The quality versus just the quantity of leverage. Definitely something to keep in mind as you watch this space.